Coming up, the Australian share market hits another record high, the banks hit multi-year highs, and the ACCC's latest priorities and what it thinks about BankWest going fully digital. That's next. Your daily 10-minute business and finance news wrap for this Thursday, the 7th of March, 2024. Later on Market Day, we'll speak with Matt Wacher from Morningstar for the day's market action, including why the share market hit a record high, US interest rates and the future for dividends. But first, to the ACCC, which has outlined its key priorities for the new financial year as the supermarket inquiry begins and BankWest goes fully digital. For more, I spoke with ACCC Chair Gina Cass-Gottlieb. So, Gina, the ACCC has outlined 10 priorities for the financial year, everything from competition in aviation, supermarkets, environmental claims, and the digital economy, for example. What is shaping the areas you've decided to focus on?
We're being shaped by the key factors affecting our economy and also that we hear from the community, and that there are three of them. The existential need to move quickly on the net zero transition. Secondly, the disruptions happening through the increasingly digital economy. And thirdly, the cost of living pressures everybody in the community are feeling. And that has shaped our focus on the key sectors and the issues that we're looking at.
I'd love to touch on some news of the day issues relating to the priorities. One of the priorities is to promote competition in essential services with a focus on telcos, electricity, gas and financial services. So given that last point, the decision by BankWest yesterday, which is owned by the Commonwealth Bank, to go digital and close 45 WA branches by October, convert 15 regional branches to CommBank ones, to what extent does it concern you? Because surely this limits competition, especially in regional areas, and even just equitable access to banking services.
We know and we hear from community members the concern about the removal of personal service, and that these aspects become dependent upon people having access to and being literate in digital banking apps. We recognise this and are concerned about it. It is a decision by the bank itself. The sort of aspect in which we have a capacity to look at this is where we have an ongoing monitoring role in financial services from government to look at what is the nature of competition and the way in which it is developing. We have that ability in supermarkets currently because we've expressly been asked the question, what has happened? We've been asked the direct question, what is happening in a change of competition, including what is the change of technology, self-checkout, the use of algorithms and statistical analysis of our data, for instance, and how it's being used in optimising pricing, optimising product choices. So it's squarely been put to us by the government in the supermarket exam sector. This question, we can see the impact on competition, but it is not yet before us in the context of an ongoing inquiry. In the retail deposit inquiry last year, we had an opportunity to look at the way in which data and technology were informing the sort of strategic pricing that banks were doing, but we would need an additional, basically, direction mandate to look at that sort of question.
I know it's a what-if question. We spoke to the ABA today, who said that when it comes to branches across the country compared with other places around the world, Australia holds up its own. But it almost sounds like what you're saying is how you expect it to be an issue. Is that fair?
It is one of the questions that we are very conscious of as we have shifts occurring in multiple services, ability to acquire goods, have them delivered. We're very conscious that it becomes focused on digital engagement, digital delivery, and digital accessibility. And so we do have this question top of mind in many of the sectors we're looking at. You come back to some of the questions you see in other areas, which is, do we continue to have a universal service obligation to continue through at least one provider, a service or an ability that is available for people who cannot access or have difficulty accessing, difficulty understanding such products and services. So with our consumer focus, we are troubled by and concerned about accessibility as well as affordability, and this is an accessibility question as well.
Okay. So we've mentioned cost of living issues. We've gone into detail about the digital economy. As you mentioned, that's one of the key issues you're looking at in next year. How are you seeking to protect those most vulnerable or at a disadvantage?
In a couple of ways. So firstly, we have a new priority relating to the NDIS and making sure that NDIS providers are very aware that they must comply with the Australian consumer law. Now, that particularly includes not making misleading representations about the pricing or nature of services that they're providing. We have taken on, and we have a role as the chair of a task force together with 2 NDIS agencies to raise awareness for participants in the system that they have rights under the consumer law. And in addition, we have allocated resources so that we are investigating and ready to take enforcement action against providers who are exploiting and not treating in accordance with the consumer law participants who are extremely disadvantaged and need the support, proper support of that system. So that NDIS one is a good one. We also are very invested in every respect in which we can be in all our efforts in the National Anti-Scam Centre. We have been very focused on investment scams. We are seeing some progress in terms of reduced reports to us. For us, all that does is encourage us. We need to go further. This is in cooperation with telecommunications companies, the banks, and also digital platforms. It is only a start. It's positive, but we want to move to mandatory codes, and we want to move to better performance again in order to restrict such risks and losses to people. And we know the most disadvantaged and people experiencing vulnerability are disproportionately affected by the risks of scams. So we are very focused on that in a number of our priorities, and we have also established a First Nations outreach and advocacy team. That is, we already have some very good relationships, but we're going to build those further so that we are listening to the voices of the multiple communities that we have developed close relationships with, and that it then informs all of our work across the ACCC, frankly, that has a contact with and that acts to protect in the interests of First Nations communities. So it is also a very key part of our priorities.
That is the ACCC's chair, Gina Cass-Gottlieb.
Now, Market Day on the SBS On The Money podcast.
Let's take a look at the Australian share market now, which did hit another record high. The S&P ASX 200 finishing about 0.4% firmer, 7,763. That's despite a post-lunch lull. The market rallied towards the end of the session. For more on the day's market action, I spoke with Matt Wacher, the Senior Investment Officer at Morningstar. Matt, first of all, the Australian share market at a record high today. The dollar has also surged against the greenback. Gold also at a record. How much of all of this has to do with the US Federal Reserve's Jerome Powell speaking overnight? Can you run through what he said?
Well, I think he gave the message that certainly rate cuts are on the horizon. And I think he used the word that, there could be significant easing over the next couple of years. I guess the key question is how imminent that is. And I think markets may have got a bit ahead of themselves. because as we've seen today throughout the day, futures have opened lower, the US futures. So maybe they thought, yes, here we go with the rate cuts, but then they've started to adjust their thinking a little bit as they've processed the rest of his message, which was inflation might not be beaten just yet.
So if the market's kind of waiting for these potential interest rate cuts, the big question is when in the US, does it have any implication for Australian interest rates and the market here?
Well, I doubt that the Australian, that the Reserve Bank here is going to cut before the US. Certainly, there's been some talk of rate cuts later in 2024. Now, Australia didn't raise rates as much as the US, so they probably don't have as much cutting to do when the time comes. But at the same time, economic data has been reasonably soft out of Australia over the last little while, and we saw that reasonably soft growth numbers the other day. China's been soft in terms of its growth, and certainly commodity prices have been a little bit weaker. So potentially that could come earlier, but certainly not till the second half of the year for Aussie rates.
If we have a look at what's happening on the share market today, the banks are doing particularly well. The likes of the Commonwealth Bank at a record high. I think Westpac and NAB are at multi-year highs as well. Why? Can you run us through what's happening with the banks? Does it have to do with the rates outlook? Because at the same time, we also heard from the ABS, which said today that lending for housing fell 4% in January. So the number of loans are down.
Yeah, I think that really with the banks, even though there's been lots of competition for mortgages and whatnot, they're still pretty well in control of their margins. Margins are still reasonable for the banks. And that seems to be a bigger story than the credit growth story at this point in time. I think part of that is also, interest rates probably not going up again. It's almost a certainty now that rates won't go up again, certainly in the near term, and rate cuts are on the horizon, as I just mentioned. And that's really giving investors a lot of cause to be comfortable on the bad debt side of the equation. There's also talk, this is a bit left field, but there's also talk of some big fund managers losing mandates and that money going into passive funds, and that's pushed the banks up a little bit as well. Not sure how much credibility that has, but certainly it's added some buying pressure.
It's a big day for stocks going ex-dividend. A lot of the miners, BHP, Rio, South32, Woodside. What's the outlook for dividends in the future as a whole?
So I think, the miners in particular, their earnings have been like software companies lately on the back of higher commodity prices, particularly iron ore. Now that's started to reverse a bit. And so I think probably dividends in the mining materials sector I wouldn't be expecting blowout dividends again going forward. I think that we'll see some softening there. But the banks, I think, still have room to continue to pay dividends, even if earnings come off a little bit. And so generally, I think it's going to be a mixed environment for dividends, but dividends are still going to be reasonably intact going forward.
Now, I'm not sure how much of a big deal this is for you. I'm curious to know whether or not ASIC finding that the ASX breached integrity rules, how serious this is, and does this implicate you as a fund manager or for any traders out there?
Look, I don't think it's not the biggest deal. I think that actually, the previous management of ASX, made some mistakes. They've probably got so the current management that's done some really good stuff lately has got a lot more scrutiny on them. Unfortunately for them, I think that scrutiny probably won't go away. It's a really important business to the Australian economy, the ASX. But current management have made some good changes. We actually think the ASX is reasonable value, even looking through this noise at the moment. So it's a reasonable opportunity.
So speaking of opportunities, more broadly, where do you see the opportunities for investors at the moment?
Look, in Australia, there's a few opportunities. We thought the banks were quite attractive earlier in the year, but they've done so well, as we just spoke about. We think, some of the Santos, one of the oil companies out there, and then there's a few other companies like A2 Milk that even despite China, we think that's a reasonable opportunity as well in the Australian market. But the Australian market's not holistically cheap at this point in time, and it's going to come under some pressure. If you're looking for offshore opportunities, we think generally emerging markets are quite cheap. If you're in for want to strap yourself in for a ride from a volatility perspective, then some China tech stocks are really high quality companies that we think are very, very cheap at the moment, but you have to deal with all those geopolitical risks around China. And then some in Europe, we think, there's some financials there that are quite cheap as well and reasonable opportunities. We think, US big tech stocks have run really hard. We'd find it difficult to be jumping on board Nvidia right now, although it's such a great company. Out of the big tech stocks, we think that Google or Alphabet still looks reasonably attractive in an area that's run really hard lately.
That's Matt Wacher there from Morningstar. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.